This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin. The Bitcoin chart there showing Bitcoin trading at $41,606. Bitcoin is down about 3.25% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. Let's take a look at some of our top stories. U.S. Senators Maggie Hassan of New Hampshire and Joni Ernst of Iowa are proposing legislation requiring the Treasury Department and other agencies to track crypto mining and use cases worldwide. This would be in part to identify vulnerabilities crypto introduces to the global microelectronic supply chain. Meanwhile, e-commerce giant Alibaba will stop selling specialized mining equipment on October 8th, saying it is following Friday's PBOC guidelines, but also taking note of global crypto regulation instability. At least 18 more crypto platforms and companies are exiting China following a nationwide crypto ban, including leading crypto mining machine maker Bitmain, announcing they will halt sales in China and move most of its production out of southern China and into other countries in response to the latest government crackdown, according to CoinDesk sources. And joining us now to discuss is Zach Bradford, CEO of CleanSpark, a sustainable Bitcoin mining company. Hey there, Zach. So a bill proposal, first of all, in the United States to track Bitcoin mining and use cases worldwide. I'd like to hear your thoughts on the feasibility as well as the utility of this proposal.
I think it's an interesting proposal. We're on the side that we believe that self-regulation is really important in the space. But also there are going to be times where governments choose to step in and watch what's going on. And, I think that can actually be a good thing that creates stability as a whole. You look at announcements and what that does to volatility. And I think I, for one, would be all for, what they're proposing to a degree. I think it's also an interesting way because my belief is a lot of the data that they will find will support that miners are behaving in responsible ways and that there's really nothing to be scared of.
Right.
And, bringing knowledge and light on that can be a good thing.
So lawmakers aim to estimate how much crypto was mined overall between 2016 and 2022 and identify which cryptocurrencies were mined. It's unclear whether the bill makes a distinction between proof-of-work coins like Bitcoin or proof-of-stake coins, whether or not they would also qualify. And the aim is to track the microelectronic supply chain for vulnerabilities and whether there are any opportunities in crypto mining operations. Is this good for crypto or bad for crypto?
I think that, there's winners and losers in all things. But again, I think that broadly stability is a good thing. And, I don't know that there needs to be more oversight than there is, but I do think that what they will find, as I said before, is going to shine a light on areas to create knowledge that nobody needs to be afraid of anything. Miners are behaving responsibly. We're using good power sources. And, I don't think that there's going to be any big surprises or gotchas there.
Okay. Moving over to China, where they are having a crypto crackdown, a ban on mining. Alibaba will stop manufacturing mining equipment there. Bitmain is also moving out. Is this ban the real deal, for real this time in China?
Yeah, as you mentioned, it's been banned before. I do think that this is more of a real deal ban. But again, I think that it's set up that, the winners in this space is really going to be the fact that Bitcoin becomes more diversified. Before these bans, in China was the majority of the mining hash rate. And so that diversity is healthier for the blockchain. But I think that, again, the loser on this side ends up being the Chinese government. They really had inside the country a strong hold on hash rate, and the exodus has happened. So I do think it's the real deal. but I think it actually is increasing the overall health of the mining environment worldwide.
Right. Well, we have Senator Pat Toomey tweeting out that China's authoritarian crackdown on crypto, including Bitcoin, is a big opportunity for the U.S. It's also a reminder of our huge structural advantage over China. You agree?
I do agree, actually. I think it's a big opportunity that we have here. And, there are resources in the US, there's power available. And we're seeing that hash rate migrate over to the US, which I see as a big win for US based mining companies and our investors.
Right. Though SEC Chair Gary Gensler seems to have a different take. He's more critical of Bitcoin, stablecoins in particular, and DeFi. Will U.S. regulators follow the path of China, do you think, or will significantly limit crypto innovation to a degree?
I think that there is still some risk that regulation impacts things. The good thing is Gensler, as the chairperson, is fairly educated on the cryptocurrency space, formerly taught at MIT. And my belief is he generally has a positive take on, Bitcoin in particular. It seems to me that they're focusing their attention on stable coins, to a degree on staking, and a few other areas. So I do think, Bitcoin in particular, I think is in a good spot. Could it hurt innovation? I think it could to a small degree, but overall we're pretty bullish about things, and our hope is that we see a fairly balanced approach on the direction that is taken in the end.
Finally, you have some news yourself. You're transitioning at CleanSpark, transitioning some mining power to Foundry USA Pool. Tell me a bit about that.
Yeah, we're really excited about the move. We transitioned into Foundry, where we like it. It's a U.S. based pool. We're also, as a public company, transparency is important to us. And when we looked at the Foundry pool, we saw that the transparency we needed was there. But again, we're excited. We moved our hash rates to a U.S. based pool. It's all produced in the U.S. and based on the way that we see the regulatory environment, we believe it's a good move.
All right. Well, congratulations then, Zach. Appreciate you coming on the show.
Absolutely. Thanks for having me.
That was CleanSpark CEO Zach Bradford. Coming up, Bitcoin price analysis with Vincere Wealth Management.
CoinDesk indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Technical chart showing Bitcoin is trapped in a narrowing price range. You see down there in that little triangle between the white lines. Bitcoin is trading lower after sellers responding to resistance near $45,000. Support is nearby at $40,000, which could stabilize the pullback. The relative strength index on the 4-hour chart is neutral after reaching overbought levels last week, which preceded a brief 14% price bounce. On the hourly chart, the RSI is the most oversold since Sunday, suggesting intraday buyers could remain active. And on the weekly chart, upside momentum has slowed over the past 2 months, indicating a weaker uptrend as price increases remain limited. Bitcoin is reversing the weekend's price bounce alongside weakness in gold as the prospects of a tighter monetary policy in the United States push Treasury yields and the dollar higher. Treasury data shows that the U.S. 10-year real yield has risen by 20 basis points this month, but remains deep in negative territory. A continued ascent in real yields may hurt gold and bring moderate selling pressure for Bitcoin from those who have adopted the cryptocurrency as an inflation hedge. And joining us now to discuss Bitcoin price analysis more is Isaiah Douglas, partner at Vincere Wealth Management, a financial advisor to dentists and veterinarians. Welcome, Isaiah. So taking a look at Bitcoin, this narrow trading range, what is your outlook?
I think, you can look at Bitcoin as something in the very near term, but if you look at adoption, whether it's the news coming out of El Salvador, whether it's upcoming fourth quarter announcements from different publicly traded companies, there's going to be more demand. And if you look, I think it was published from an on-chain analysis person that I like to follow, which is Willy Woo. You look back at internet adoption, right? And we're kind of in that spot right now where we were in 1997. And so, yeah, when you look real close, if you're a trader or a swing trader, sure, maybe you're going to pay more attention. But I think the story of the decade is adoption in Bitcoin, and seeing that by nation states, companies, and individuals changing their unit of account. And Christine, I know you talked about negative real yields. I think that's also going to be a driving factor when you look at the global amount of negative yielding debt. Bitcoin continues to be something that is more and more attractive.
Yeah, and your client base is focused on dentists and veterinarians, I saw. Are they interested in owning Bitcoin?
Yeah, they are. So my specialization on the team is really within those two. So you think about, private practice, healthcare owners, and then we also work with a lot of folks in tech. My business partner, Josh Bennett, works a lot with those that are in kind of the tech space, and the rest of our team, it kind of varies. But there absolutely is an interest within the medical community as well, because as a small business owner, just like in any industry, the question is, if you've had a really good year and you're holding a lot of cash and maybe you don't have anything to invest in right now, how do you protect your purchasing power? These are conversations we have all the time. How can you ensure that the dollars that you earn today, that you're storing those in something that's going to allow you to buy something in the future when you want to reinvest, maybe build a new office or new equipment or hire? So
what are you telling your clients? Are you telling them, well, right now is a good buying opportunity for Bitcoin, or are you looking to buy other coins? My thoughts is, Bitcoin to me is the one that makes the most sense for the vast majority of people. I'm not going to say that everything else, from an altcoin perspective, is not worthwhile, but definitely Bitcoin is one that we like and recommend and chat with people on. Again, going back to, I know I've seen other interviews where it's going to depend on that person's situation, also with their risk tolerances, but we've absolutely had people taking the Michael Saylor approach with their businesses and saying, hey, we're going to convert some of our cash into Bitcoin, maybe not in the same level that has been there in the past. So I know there are many different risk tolerances and profiles, but perhaps you can give an example of what, one profile, given that you deal a lot with people in the healthcare industry, and what kind of allocation you're recommending.
Sure. So I recently kind of published a piece for other advisors, actually through CoinDesk, kind of talking through the different allocation perspectives. And so for us, kind of that, starting tier, call it the Mark Yusko get off of 0. So 1%, hey, just take a 1% position. For maybe the more traditional baby boomer getting closer to retirement, I think a 5% position. To protect and offset against kind of the traditional 60-40 portfolio makes a lot of sense as you work your way up, whether it's an alternative sleeve or maybe part of what's called the Dragon portfolio from Chris Cole. I would say anywhere from 1 to 20%. If you're trying to get aggressive, a 20% weighting, and that may be directly into spot Bitcoin. That may also be in relation to Bitcoin equities, whether it's stocks or companies that are holding Bitcoin as a treasury asset.
Yes, you wrote an article for CoinDesk, and I just had a glance at it. You also mentioned that Bitcoin is default insurance for fixed income investors. Explain a bit what you mean by that concept.
Yeah, and I linked to the article there as well from Greg Foss, who's someone that I've really enjoyed learning from. He's a high yield bond trader, has done it for 30 years. But if you really look at kind of where fiat currencies are around the globe and the amount of debt that we have, it's very unsustainable. And so the thought being, if you do see some sort of contagion, and I know people will talk about Evergrande being the situation where it's going to spark things off and be a Lehman Brothers moment. Don't necessarily agree with that, but from the standpoint of there is a lot of risk in fixed income. So if you rewind the clock and look back at the last time we've had periods where maybe there's rising inflation and we're in an experience, so call it like World War II, you maybe are getting your money back when you own U.S. Treasuries, but your purchasing power is going to be 60 cents on the dollar. And so by having the ability to have that protection, if you do see fixed income sell off and your purchasing power really degrade, having a small allocation to Bitcoin to offset that is powerful. So that's kind of the thought process behind it. But
yeah, and that's part of the the happenstance of Bitcoin coming out after the 2008 crisis. Now we have it. So if we have another Lehman moment, it's there for you if you want to take it. All right, Isaiah, we got to end it there, but thanks for joining us. Appreciate your insights. That was Vincere Wealth Management Partner Isaiah Douglas. Isaiah is moderating 2 sessions next week at a special CoinDesk event, Bitcoin for Advisors. Join us on October 6th for this virtual experience, a chance to connect with over 300 investment advisors who are leading the way toward the future of investing. Financial advisors can register for free on our website at coindesk.com/events. And that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.